In seconds, say what matters. Secondoं में वह कहते हैं जो मायने रखता है. It appears that foreign portfolio investors, or FPIs, who were aggressively buying Indian equities in April and early May, are now turning cautious and possibly booking profits at higher levels. On May 26th, FPI inflows into the cash segment stood at just 135.98 crore, despite the Nifty 50 closing with a gain of 0.60%. Overall, FPIs remain net buyers this month, with investments totaling nearly 12,328 crore. However, the trend in recent sessions suggests that this momentum may be waning. Two key factors are believed to be driving this shift: stretched valuations in the Indian equity market and mixed Q4 earnings results. At the same time, a weak dollar appears to be limiting the pace of foreign capital outflows. Adding to the uncertainty are global cues, including the U.S. Federal Reserve's interest rate outlook, trade tensions led by President Trump's tariff policies, and broader concerns over global economic growth. All of this makes it difficult to predict whether FPI inflows will continue in the near term. But the bigger question is, will the Indian stock market crash if FPIs begin to sell in large numbers? Experts say, not likely. Despite near-term volatility, India's economic fundamentals remain strong. In fact, there are 5 key reasons why the market may stay resilient in FY26. First, a healthy monsoon. The southwest monsoon arrived in Kerala on May 24th, 8 days earlier than usual. Forecasts suggest above-normal rainfall this season, which is positive for agriculture, rural demand, and consumption-driven sectors, like FMCG and automobiles. Second, the Reserve Bank of India has announced a record dividend of 2.69 lakh crore to the central government for FY25. This windfall will support fiscal consolidation, potentially strengthen the rupee, and could even lead to sovereign ratings upgrades, all of which are favorable for investor sentiment. Third, the benefits of tax relief announced in Budget 2025 are expected to kick in during the second half of the fiscal year. With higher disposable incomes, consumption is expected to rise, giving a boost to the broader economy. Fourth, inflation is under control. Retail inflation dropped to a 6-year low of 3.16% in April, marking the third consecutive month below the 4% mark. With easing geopolitical tensions and a strong monsoon, price stability is likely to continue. And fifth, retail investors are staying invested. As of May 26th, nearly 21.68 crore investors were registered with the BSE, a 25% rise year-on-year. This strong retail participation has helped cushion the market during previous episodes of FPI outflows. In conclusion, while FPI activity may remain volatile, India's domestic strength, driven by strong economic indicators, policy support, and retail participation, could help the market weather the storm. #source, Mint, stay tuned on BizzShort for more such update.